Part 4 Role Play. Hi Cynthia, thanks for being a volunteer in my assessment. Do you agree to be included in the audio recording?
Yes, I agree.
Thank you. Let's begin. Good afternoon, Jennifer. Thanks for coming. Nice to meet you again.
Good afternoon, me too. Nice to meet you, Lynn. Sorry it's only myself coming. Philip and I have planned to come together, but unfortunately, he has to go interstate urgently to visit a sick brother. As a real estate agent wants to know our commitment in buying that apartment as soon as possible, we cannot wait any longer, so I came along and I can pass information over the phone if needed.
Sorry to hear that. Hope his brother get well soon. So today I will give you a summary from our last meeting. Based on the information, I will give you some options to consider and also my recommendations on your home loan. If you have any questions, you are free to ask. From our last meeting, both you and Philip work full-time. You are looking for buying your first home and would like to live in it. The property you would like to purchase is a 10-year-old 2-bedroom, 2-bathroom strata title apartment, and the price is $490,000. And you would like to borrow $440,000 from lender. Is that correct?
Yes, correct.
Good. And you are looking for a 30-year long term with a variable interest rate of 4.5% per annum. Is my understanding correct?
Yes, correct.
Thanks for the confirmation. I will now summarize your family financial status. So Philip's annual gross income is $58,000. Your annual gross income is $95,000. Your total gross income is $153,000 per annual, and the net monthly income is $9,734. Your total liability is $5,600 personal loan with 2 credit cards of $5,000 and $4,000 limits. As a young couple without any child, your monthly living expense is estimated to be $2,750. Based on Genva's serviceability calculator, your maximum loan amount is over $900,000, which is much more than your required loan amount of $440,000. The loan to value ratio is 89.8%, higher than 80%. So the lender will require you to buy a lender's mortgage insurance. The estimated LMI is about $7,790, and we can add it to the total borrowing amount. So you don't need to pay for it from your savings. Based on the total loan amount of $447,790 at the variable rate of 4.5%, the principal and interest repayment per month is $2,269 for 30 years long term. Therefore, you will have a monthly surplus of $4,265 after the repayment. So you shouldn't have any problem to meet your financial obligations.
Okay, glad to hear that.
However, some potential risks might impact your home loan repayment or financial situation. For example, you have no child right now. If you consider to have one or more children, that will increase your monthly expense and thus reduce your surplus every month. Another risk might be the cash shortage when you need to move into new home and purchase new furniture or do some renovations. Last, if the loan is on a variable rate and it goes up in the future, you will need to pay more interest per month, which will also reduce your monthly surplus.
I think we're not considering having babies in next 5 years, and our savings should cover the cost of moving and small renovations. For the risk regarding to increase of interest, do you have any solution to manage it?
Yes, we have. I'll talk about that later. So based on your situation, I have two lenders that might meet your needs. The first lender is ANJ Bank and the other is Westpac Bank. The ANJ Bank has a home loan product that offers variable interest rate of 4.5% per annum. The loan term is 30 years. They accept LVR up to 95% if you buy the LMI. The application fee is $600 and registration of mortgage fee is $100. Valuation fee, security admin fee, and search fees are waived by the package, which means ANJ will charge you extra $700. The second option, Westpac offers the same variable rate at 4.5% per annum. They also accept loans LVR up to 95% with LMI purchased. They also offer premium option home loan features such as withdrawal facility, funds access via card, and offset account. Currently, they have a promotion package that waives all application-related fees, only charge you registration or mortgage fee for $100. So you only need to pay $100 to Westpac. I recommend Westpac Home Loan Package for a couple of reasons. First, it's one of the big four banks with branches and ATMs all over the country. You can easily find help if you have any questions about your loan. Second, if you would like to repay your loan more quickly, you can open an offset account, put extra money in it, and that will reduce the total cost of interest. Third, Westpac offers flexible home loan packages such as variable rate with offset account, fixed rate with 1 year, 2 years, up to 5 years. Last, the total cost of application fee is much cheaper for Westpac Bank. In conclusion, I would recommend choosing the Westpac Home Loan Package with variable rate and offset account. If you are afraid of increase of interest, we can switch the whole or part of the loan amount to be fixed rate, so that you won't need to worry about the risk of interest increase.
Okay, that sounds the right choice for us.
Okay, before we go any further, I would like to make sure you are clear about the disclosures of our service. I have sent you and Philip our credit guide and quote by email. Have you received them and have a read?
Yes, we have received them and carefully read them.
Good. So you understand that we do not charge you for our service, but you may need to pay the lender's fees and charges, and we receive commissions from the lenders when they provide finance to you.
Yes.
If you wish to make a complaint, just write to us at the address shown in credit guide. And if you are not satisfied with the outcome of your complaint, you can contact our external dispute resolution scheme at Australian Financial Complaints Authority. The contact details are also given in the credit guide.
Okay, thanks.
Jennifer, do you have any other questions about the loan proposal?
Yes, thanks for the detailed analysis. I have 3 questions about the home loan. First, what would you recommend as the best options for us to reduce the long-term interest cost and pay our loan off more quickly?
As I suggested earlier, the best option would be using an offset account. If you open an offset account and put your extra saving in it, you can reduce the interest amount you pay per month, which means you save more money and can pay off the loan more quickly.
Okay, thanks. The second question is, what do you suggest in terms of us getting a fixed rate loan? Is it a wise option?
This depends on the variable rate interest change in the future as well as your financial situation at that moment. If you worry much about the possible increase in interest rate, you can choose using fixed rate loan. By using fixed rate loan, the repayment amount is fixed at a certain amount, so you will not need to pay extra interest if the rate increase. But you also need to pay that amount of interest if the interest rate decrease. You may want to set part of the loan, for example, half of it at fixed rate and the other half at variable rate. In this case, you will have the flexibility in handling the interest change.
Okay, my last question will be, is there a way around our ineligibility for any first homeowner assistance?
Unfortunately, you are not eligible for first home owner grant because the property is an existing home which has been lived in. But you are eligible for first home buyer assistance scheme, which means you don't have to pay stamp duty for the purchase.
Okay, thanks.
Any other questions?
I think that's pretty much it. I have much clear understanding of our home loan and I'm much confident about the purchase now. Thank you very much, Lin. I think I will have a discussion with Philip and most likely we will go with your recommendation.
You are welcome, Jennifer. So please let me know your decision once you have made and we'll go from there.
We will. Thank you, Lin. Bye bye.
No worries. Bye bye.